We saw a big split in the food space earlier this week with Kellanova taking over popular snack brands like Pringles and Cheez-Its and moving cereal brands like Frosted Flakes under the WK Kellogg umbrella. And WK Kellogg CEO Gary Pilnick spoke to Yahoo Finance, saying this is a new beginning. Let's bring in Brooke DePalma, who joins us with the details. Kellanova, I can't get used to that.
It definitely doesn't roll off the tongue like Kellogg's does. But I did speak to WK Kellogg, another one that doesn't quite yet roll off the tongue just yet, CEO the other day following this spinoff. And he really is determined to take Frosted Flakes, to take other cereal brands that everyone knows and loves into the future. And really, when you think about what these brands entail, they're ones that we see on the shelves, ones that many of us grow up with. They include Fruit Loops, Kellogg's, Apple Jacks, Rice Krispies, Raisin Bran, as well as a few others. And really, Gary Pilnick here really determined once again to take this 117-year-old company, what he calls now a startup, because of the spin into the future. And he broke it down into three different horizons that he's looking at to really grow this company. He said in the first 3 years, the company plans to optimize that core cereal business. He said the company is investing $450 to $500 million in the company's supply chain and intends to move forward with lessons learned after that 3-month-long strike back in 2021, as well as that fire out of its Memphis plant back in 2021. But after those 3 years, he said the company plans to move beyond cereal and is certainly looking at innovation as consumers' snacking habits continue to evolve. And in addition to that, he said that the company is open and looking to M&A targets where they would be a natural parent. He said they want to bring incremental value by being the owner of that business, but also finding cost synergies and driving revenue. And so definitely a lot of eyes on what exactly this spinoff or rollout to be.
And speaking of those eyes, I mean, I know we've talked a lot about, the snacking economy, how it's still holding strong. What's Wall Street's reaction been to this?
Yeah, well, really, the spinoff happened so that this North America cereal business can be hunkered down on, I guess you could say. But as you see today, shares down nearly 7.5% for WK Kellogg. And Wall Street isn't quite yet sold on this strategy that the company is laying out. Just 4 analysts initiated coverage so far. And in the early innings, we're hearing from analysts that, there's lots to be said, lots to be done. Morningstar weighing in a note to clients saying that WK Kellogg shouldn't be so quick to jump into other categories. This was intended to focus on that cereal business, and so the focus should have remained there. Goldman Sachs also weighing in, saying that we see near-term margin expansion potential, unfavorable input costs, but they are keeping their eyes on that 5-year contract renewal set to happen in 2026. That once again, there was a strike back in 2021, that 5-year contract set to expire in 2026. But when I asked the CEO what exactly his message is to investors, he honed in that there's a unique opportunity here. They are a 117-year-old company that he sees now as a startup, and they're not too focused or running operations day to day based upon the stock's reaction. So certainly lots to watch as this continues to unfold.